Yo, what's going on, guys? It's your boy Mac the Trader, and welcome back to another video. In this video, I'm going to be showing you how to make $10,000 as a day trader. You guys heard it correct. So we're going to take this from top to bottom, all right? I'm going to show you guys the $10,000 that I made. I'm going to go over the analysis of the trade. I'm going to give you guys some tips and tricks, okay? Especially for those of you that are day traders looking to take advantage of these higher time frame analysis, looking to take advantage of all of the return on investment from an entire trade idea. That is what I'm here to show you today, all right? So with that being said, if you're not a part of the YouTube family, go ahead and subscribe, as well as I would love to know what you all's thoughts are on the new thumbnails, okay? We have a new team creating our thumbnails, and I would like to know you all's opinion as we continue to improve our YouTube channel. We haven't been live streaming lately, but moving into September, as you all know, those that take off from the markets usually start to come back in as it relates to institutions and banks, okay? So now that we are moving into September, we should see some very, very nice movement within the market, and you guys can be expecting more live streams this coming month. I'm super excited about that, all right? So with that being said, let's go ahead and get into the video. Let's go ahead and get into the breakdown, and I will catch you guys on the charts. Let's get it. What's going on, guys? This is your boy Mac, and I have an announcement for you. For those of you all a part of my trading community, we are currently up about 20% on our last day trade called out to all of my trading community. If you are not a part of my trading community, but you want to be able to produce consistent results and you want to be able to have those payouts funded traders have, then what I want you to do is I want you to join my trading community. I will catch you all on the next one. So as you guys can see, today is August 30th, okay? This was a trade alert sent out August 23rd, all right, at 23:05 Eastern Standard Time, which is essentially 11:05 Eastern Standard Time PM. Okay, so I sent this out to all of my traders and mentorship students that are a part of our trading community here at Mac Trading Academy. All right, link is in the description if you would like to gain access to that. Is giving us somewhat of a retracement here. Overall, I was looking for an H1 POI here with an M5 buy entry schematic, and I was going to take that during London or New York. I gave to my students and my trading community members how that entry schematic is going to look, and then I told you guys we're going to look for that entry during London or New York session, which took place, but we're going to hop into the charts to go ahead and break all of that down. The first target that I gave you guys was right here around 1.18163, which hit for about 9%, and the second target was right up here around 1.18778, which hit for about 19% return on investment. So we're going to go ahead and break these down now, and I'll catch you guys on the charts. Let's go ahead and get into it. All right, so we're going to start on the H1 time frame. All right, so we're going to start on the H1 time frame to break down this trade. We're going to go over exactly why this was the point of interest, what's going on within this area, why this was our target, and what we were anticipating, and the reasonings behind that anticipation of price. All right, so just starting out with what's going on over here. All right, so clearly we can see that we are within a downtrend, right? Price is definitely creating lower lows, lower highs. Let's go ahead and just change this up really quickly. There we go. Right, and we know that there's more sell pressure, okay, within this area than buy pressure. Right, we can see that because price is creating essentially lower lows and lower highs consecutively back to back. So we have this lower low, lower high, lower low, lower high, lower low, lower high, so on and so forth, right? So we know that we have essentially buy side liquidity resting above these areas here, right? We have buy side liquidity resting above this region here. We know that. We know that we have buy side liquidity resting above this region here. And these were also points of interest that we could have traded from. Okay, however, price did not give us a reaction, so there was nothing for us to do. So we did not take any type of sells through these areas here. Now, you could have taken a sell here, right? If you know, you definitely could have taken a sell here. Maybe on a day trading time frame, you would have produced results with this candle here. You would have at least been break even if you trade how I trade, with price reversing on you here. All right, pushing to the upside. However, we wanted to look for sells here, and then you guys can see that price completely runs out, does not mitigate, or does not react rather to our POI, which was here. Okay, this is a POI because it sweeps, mitigates, and we have that breaker structure. So this was a very, and we have displacement here. So this was very, very important POI. We completely crush this POI. So what is responsible? Okay, what is responsible for taking out this point of interest here, which is very, very important to me, all right, based on certain confluences? It's going to be this guy right here. Now, let's go back to structure, because structure is always going to be the first thing that I pay attention to on the charts. So we can see that we have this lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we have this lower high here, higher low, and then price pushes to the upside and creates a higher high. So essentially we take out our previous strong lower high structure, which is going to be here. Okay, this is strong. We create this lower low, which is supposed to be weak. We create this lower high, which is supposed to be strong in order for us to create a newfound lower low. However, between these price levels right here, between this high, okay, and this low, within this area, price decided to change its delivery of price. Okay, the algorithm, rather, decided to change its delivery of price from sellers being in control to now buyers being in control. And that takes place within this area right here from high to low before the break, right? Now, after that takes place, okay, we know that we have some type of point of interest within this area. If, let's say, you don't quite know how to refine, that's completely fine, right? There are different shortcuts and things like that that you could look for, different patterns that you could look for, such as pin bar, right? So anytime you guys see a bullish or bearish pin bar, that candle should be on your side if you're looking for that candle in the correct area. Okay, then you can refine to that candle, to that pin bar candle. However, my refinement was going to be this bearish candle here. We can see that this bearish candle, first of all, right next to it, we have an inside bar, which we know is some type of, okay, which is essentially our range on the lower time frame, demand coming into the market. Then this candle right next to it decides to sweep the liquidity, resting here, okay? Then we have that nice push to the upside, giving us our change of character or change of momentum, and also targeting multiple buy-side liquidity areas. 1, 2, 3, 4. So we take out multiple buy-side liquidity structural areas, right? Anytime you guys run, or anytime you will see a run on buy-side liquidity, you then want to see a run on sell-side liquidity, right? That's just a good rule of thumb. So once price started to instigate sell-side liquidity and we started to run on the sell-side liquidity, that's how we knew that price was in a valid counter trend. Once we have that counter trend, we want to trade back into the point of interest that was responsible for giving us the main push, okay? That happens to be this area here. From here, okay, we then broke that down to a lower time frame, as you guys were able to see. Now, let's talk about this counter trend really quickly. So within this counter trend here, we have our first valid higher low point here, okay? This higher low is also a swing low, okay? So within this swing low, price pushes to the upside. We do create internal swing low, which takes place here, all right? But I'm just looking at overall structure right now, not necessarily candlesticks. So overall structure, this would be our swing low. Price pushes to the upside, then we take out this swing low, and we also leave displacement in the form of imbalance here, right? That means that we have a high probability of this candle here being an order block. Oops, there we go. It doesn't have to be, okay? But there's a chance that it could be. All right. Now, I like to see a little bit more confluence in what we see here as relates to order block trading. All right. So I would not use this as, you know, an order block just to trade from, but this is a point of interest that you guys could definitely use for the counter trend. All right. Now, if you guys do keep up with my trades, we actually did take this counter trend move into this region here. Our take profit was right above this demand zone here, right above this point of interest, and we can see that price taps into that. Now, because that's counter trend, okay, and didn't give us the best confluences, we're not going to necessarily break that down on this trade breakdown, but if you guys want to see that, let me know in the comments down below, and then we can talk about the entry positions for this counter trend move and how you guys can get into counter trend trades as well, right? So we can see that price taps into our H1 point of interest here, and that's when we started to look for our entry during London and New York session. All right, so now that we are on the M5 time frame, okay, this is essentially about 7:35 in the morning. All right, I don't start trading until 8, so let's go ahead and get 8 a.m. Okay, so 8 a.m. is here. Now, we can see that price comes very, very close to tapping into this zone here, okay? That would have been based on your refinement, whether or not this would have counted, okay? However, we did have 8:30 high impact news, okay, which is right here. Those of you that are students of mine that were able to hop on the New York live trading session, I told you guys what we're going to do is we're going to wait for the high impact news to release, and then we're going to look to get into the market after our higher time frame zone. After our higher time frame zone, has been mitigated a little further, right? This is why it pays to trade alongside someone who knows exactly what they're doing within the market, because they're able to break things down and explain things to you in a way that make it very, very easy and straightforward for you to take advantage of. All right, so we didn't trade the market until 8:30. So let's actually just put a vertical line here. Essentially, I just did some busy work as it relates to my agenda throughout the day, because most of you guys know I am an entrepreneur first, and my trading profits really assist me with being able to invest into my businesses. So here we do see we have a sweep of buy side liquidity. Okay, however, okay, those of you who are on the live trading call, okay, those of you who are part of the mentorship program who joined in, you guys were already knowing exactly what I was going to do here. So once price released that news around this area here, this was 8:30, all right, we had a nice move to the downside, 2 bearish candles on the M5 time frame, not bad at all, and then price mitigates our higher time frame H1 POI a little more. All right, so from here, we're essentially just going to look for our entry schematic. So let's go ahead and play price out. All right, so we can see that price creates a swing high here. Okay, we're still going to play it out. Let's just keep going. Now, I don't necessarily need to see a sweep of liquidity when I'm looking for an entry, okay, as long as my overall structure is sweeping some type of liquidity. So my overall structure would be this area here, and we can see that this area here is sweeping this liquidity here and also mitigating our higher time frame region. So let's say that this wick did not, or let's say that this wick would have wicked this area here first. Let me draw this out for you guys. So let's say this wick would have wicked here, and then we would have looked at the push to the upside, okay? We could have traded from here, all right, for buy position, okay? But let's say price did not wick this area here, did not sweep liquidity, and then just pushes to the upside. I can still look to take a trade here, but more than likely I will be looking to take a trade from this region here. So students, be sure to sign up for the Wednesday night midweek check-in with all group students, with all mentorship students, so you guys can understand these more advanced concepts that I'm laying down, all right? So if we continue to place price out, I believe we had another sweep. Actually, I know we had another sweep. So we had a sweep of liquidity here, okay? And that was absolutely beautiful. So we're gonna go to sweep, not sub, sweep, right? And then I was looking for this high to break here, okay? Because this was the swing high that formed before we had the sweep there, or the break to the downside. So let's go ahead and play price out. So essentially I just had my alert set here. And we have the break here, okay? Even though it's a wick, okay? How I like to refine, I would consider this a valid entry opportunity, okay? Meaning this level of demand here, all right? So we can see that we sweep liquidity, then we have a break of this swing high, and we have imbalance within the market here, all right? That's absolutely beautiful. All the confluences that I need, plus a little extra, right? So let's actually break this down. Let's do it like this. So let's make it salmon, and then we'll go ahead and label it. So at this point in time, we were looking for M5 buys here. All right, I'm literally just taking a risk entry on this time frame because this is a confluence entry based on the higher time frame, right? Now, we can see that we're risking on this trade about, oops, we're using the wick. We don't need to use the wick. There we go. So we can see on this trade, we're risking about 5.8 pips. Now, those of you all who are students, you guys already know, we've already went over this, but we round up, okay? So we're not going to risk anything other than half or whole numbers when it comes to the foreign exchange market. So we're going to go round that up to 6 pips. There we go. Very, very solid. And the first target that I gave you guys was right here within this area for about 9.23%. There we go. So 9.22, but it was around 9.23% right here within this area. All right. And that's going to be the first target that you're going to look to hit. Right. Now, let's go over our M15 swing high. Now, if you were trading strictly based on the M15, okay, what I would target if I were you guys is the M15 swing high. So if you did not have, let's say, me to assist you with what to target, and you were just taking this as a day trade, I would target an M15 swing high or swing low depending on the momentum of the market, because that swing high and swing low has a high probability of being taken out if you're taking entries properly. Because usually you're going to enter the market at a sweep of liquidity. That sweep of liquidity is a target of sell side or buy side liquidity, and then if price respects your entry, you're then going to target the opposite buy or sell side liquidity. I know I just said a lot. If you guys have any questions and you guys want me to go in depth with that concept, drop it in the comments down below and I'll produce a video for you. So we can see here within, or join the mentorship. There you go. Join the mentorship, and that's going to be everything you need to go, or everything you need to know, and then you'll be good to go. So we can see that this is the entry here. Okay, first target could have been this area based on day trading. Okay, however, I told you guys set your target here. All right, so that was about 9.22%. Let's go back to the M5 time frame and let's watch and see how price tags us in and what it does from there. So there we go. So price tags us in. We come very, very close to the stop loss. We then push to the upside. Our M15 swing high was here. All right, for about 5.4%. And we can see that that was hit within, literally within, let's see, where's my, here it is. So we were tagged here and our target was hit here. Within 20 minutes, you're up 5%. If you have a $100,000 funded trading account, if you are one of my funded day traders, target 5% every single trade within your funded account. You will be good to go. Now, those of you who want to target, like let's say for this trade here, based on the higher time frame, 19%, things like that, that is completely fine to do. But make sure you guys are at least taking some profit off the table at 5% in order to be profitable every single trade with those large numbers and those large figures, right? So we can see that we're looking for price to essentially target this area here, right? That's the target that I gave all of my students. And we even gave a re-entry opportunity right here within this area. And I gave that out to all of our clients within our Telegram. And this was a beautiful trade. So we can see re-entry. The re-entry ran us about 65 pips, I want to say. So I'll show you guys the re-entry in just a second. All right, so it was like this here. I told you guys enter the market. Was it here? So I know it wasn't down here within this area because we were taking it as a continuation. So it was a little risky, but we risked about 20 pips on this trade. Okay, it was here. Solid. So I gave you guys a 20 pip risk on this trade. It produced about, I want to say around 3R. So let's just set that at 3R right there. All right, and then we'll go ahead and play price out. And remember, I gave this out free to the Telegram. Everyone a part of the Telegram community, you guys received this trade for free. Literally gave you guys the parameters, gave you guys the screenshot, everything. That's a free 3R trade, 3% trade, which is not bad at all. Now, it's not like our, like 15% trades or 10% trades or 19% trades once this is a higher time frame target, which I will show you guys in just a second. But it is an excellent opportunity for you guys to still take advantage. So even if you don't get the same entry as my students and I or my community traders and I, still being a part of the Telegram community, you guys may be able to take advantage of re-entries like this, where even if you're risking 1%, that's still a 3% return. If you're risking 2%, that's a 6% return on investment simply by taking advantage of the free content, right? And managing risk properly. All right, so this was a very, very straightforward re-entry opportunity, but I definitely wanted to give out some content for that possible re-entry. So our higher time frame target is up here within this area, this black line here, as you guys can see, for around 19.37%. Okay, so within this area, we come very, very close. Okay, we come very, very close, as you guys can see, to actually hitting our target, and then price reversed on us. All right, so let's go up to the higher time frame. Let's go to the M15, and let's just check this out. So if we go ahead and play price out, all right, we can see that price reversed on us. We started to create more substructure, right? We broke out of our minor structure, created more substructure, and then we broke out of substructure, going back into minor structure once a news event dropped. And But of course, we swept sell side liquidity first, which told us that we were definitely going to sweep buy side liquidity next. All right, as you guys can see. And price hits our target here right before we had news release here, which tanked price once again. All right, so not a bad trade whatsoever. It took about 2 days for this trade here. You know, a nice intraday trade. You know, nothing to really complain about outside of just holding. I thought I had a measurement tool down here. Maybe I don't, but I thought I did. Anyways, so we can see it took about, I want to say 2 days. So yeah, about 2 days. A day and 23 hours and 30 minutes. So 30 minutes off of hitting the 2 day period. But you guys can see it was a very, very great trade to take advantage of. Risking 6 pips for 116.2 pips. Literally just applying the institutional trading concepts that I teach within my institutional trading courses and within the mentorship program. All right. Now, if you're someone and you want to take advantage of my higher time frame trade ideas, feel free to join Mac Trading Academy and gain access to the trading community. The lowest time frame that we will go on is the M15. Sometimes I do send out day trades to you guys. This morning I sent out an M15 chart because the website was down. However, usually we stick to the higher time frames. All right. By the way, any student who tried to get on the website this morning, and I know it was down for a few hours, we are now back up. So you guys who are watching this video tonight, you guys can feel free to check into the website if you guys want to go ahead and watch any content, sign up for sessions, things like that. Right. So we usually stick to around the H1, H4 time frame, but usually I give you guys H1 points of interest so you guys can at least day trade from and still hit our higher time frame swing targets. So I try to be fair to you guys. It's not going to be producing the same exact result as my students. All right. But it's going to put you in a position to be able to afford the mentorship program, all by taking advantage of the trade community trade ideas. All right. So with that being said, if you're not a part of the YouTube family, feel free to hit that subscribe button. I would love to have you on board, and I will catch you guys on the next one. I'm going to go ahead and edit this video before my gym session in about an hour and a half. Probably going to hit the gym around 1, maybe 2. Follow me on Instagram. Definitely going to have some Instagram content on that, and I will catch you guys on the next one. Peace out.